Hello everyone, welcome back to the channel. If you are new here, I'm Alexander, online business English coach, and today we are diving into an important topic that often makes headlines, especially during time of crisis: price gouging. In this video, we are going to define what price gouging is, look at some real-world examples, and explore why it happens. I also provide practical tips on how to identify and avoid price gouging. Plus, I'll break down key business English vocabulary to help you enhance your language skills while learning about this concept. So let's get started. So what exactly is price gouging? Price gouging occurs when sellers increase the prices of goods, services, or commodities to a level much higher than what is considered reasonable or fair, especially during a crisis or emergency. It often happens with essential items like food, fuel, or medical supplies when demand is high but supply is low. Let's break that down with some vocabulary. Essential items. These are goods or services that people absolutely need to survive or function. Think of food, water, medicine, or gasoline. Commodities. These are new materials or primary agricultural products that can be bought and sold, like oil, wheat, or coffee. Now let's look at a few examples to understand price gouging better. Imagine there is a massive hurricane hitting a coastal town. Suddenly, the demand for bottled water and gasoline skyrockets because people are stocking up for the storm. Some stores start charging 5 times the usual price for a single bottle of water. That's price gouging. Here's another example. Remember the start of the global pandemic? Hand sanitizers and face masks, which were normally cheap and easy to find, suddenly became scarce. Some sellers took advantage of this situation and started selling them online at 10 to 20 times their normal price. That's a classic case of price gouging. What is demand? The desire or need for a particular good or service. Scarce? When something is in short supply and hard to find. These situations create opportunities for unethical businesses to raise prices because people feel desperate. Now let's dive into why price gouging happens. There are a few key reasons. Number 1. Supply and demand imbalances. During a crisis, the demand for certain goods can increase dramatically, but the supply doesn't always keep up. Sellers then raise prices to match this increased demand. However, price gouging happens when they raise prices unreasonably. Number 2. Panic buying. People panic and start buying essential items in large quantities. This sudden spike in demand creates a shortage, and sellers use this to justify higher prices. So let's break down the key vocabulary. Panic buying is when people buy more than they need out of fear of future shortages. Shortage, when the supply of a product is lower than the demand for it. And number 3. Market power. In some cases, a business may have market power, meaning they are one of the few suppliers of a product, giving them control over the prices. In times of crisis, they can exploit this power and raise prices because consumers have few, if any, alternatives. Again, what is a market power? The ability of a company or seller to influence prices because of its control over a large share of the market. So, is price gouging illegal? Well, it depends. In many countries, price gouging is illegal during times of emergency, and governments may step in to regulate prices. For example, in the United States, some states have laws against price gouging during natural disasters or public health emergencies. Violators can face heavy fines or even lose their business licenses. Let's see the vocabulary. To regulate means to control or supervise something, especially a business or industry, according to a set of rules or laws. Violator is someone who breaks a rule or law. However, in other markets, price gouging might not be directly illegal, but it's often seen as unethical and could damage a company's reputation in the long term. So let's talk about the ethical side of price gouging. Sure, raising prices can generate short-term profits, but the long-term damage to a company's reputation can be severe. Customers may feel exploited, and that loss of trust could result in lower sales down the line. Plus, in a world where information spreads quickly through social media, bad press from price gouging can tarnish a brand's image almost overnight. Key vocabulary: we had the word ethics. These are moral principles that govern a person's or business behavior, and reputation, the beliefs or opinions that people have about someone or something based on their actions. So how can businesses avoid price gouging? Here are some practical tips. Regularly review your price strategies to ensure they are fair and justified. Clearly communicate any price changes to your customers, explaining the reasons behind them. Commit to ethical business practices, especially during times of crisis. This builds long-term trust with your customers. By following these tips, businesses can avoid the pitfalls of price gouging and maintain a positive relationship with their customers. Remember, ethical business practices are not just good for your reputation, they are good for your bottom line as well. To wrap things up, price gouging is a significant issue, especially during times of crisis when people need essential items the most. It happens when businesses take advantage of high demand and low supply by dramatically raising prices. While it can be legal in some areas, it's always seen as unethical, and businesses that engage in it risk damaging their reputation. Understanding the vocabulary we covered today, like essential items, market power, and shortage, can help you discuss the topic with more confidence in business ethics. I hope you found this video helpful in understanding both price gouging and some valuable business English terms. If you like this video, don't forget to hit the like button, subscribe to the channel, and share your thoughts in the comments below. Thanks for watching, and I'll see you in the next video.